right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for February 2nd, 2026. We are recording this at 4 p.m. Eastern Time, and this is episode number 513. And in case, just a quick announcement first, in case you have not heard yet, our big annual Tech Wizards conference is this week. So we're going to have 30 presentations over 3 days covering indicators, algorithms, software, apps, and more related to trading and investing. So be sure to join us starting tomorrow, Tuesday, February 3rd, and that'll be go Tuesday, Wednesday, and Thursday this week from 10 a.m. Eastern Time and until 8 p.m. Eastern Time. And then our panel for today, all three of them are going to be doing presentations on this event. So I'd like to introduce you to John Thomas of madhedgefundtrader.com and Norman Hallett of theirmoneyyourprofit.com and thedisciplinedtrader.com as our panel today. And Jim, the option professor of optionprofessor.com, is back to moderate. So I'm going to turn it over to him.
Okay, thanks, David, and welcome everybody. Big week ahead, I guess. We did try to start the week on a down move overnight, and then we saw that reverse here today to the upside. So, be very interesting to see how the opinions are right now because we're at critical points in the market, I think. John Thomas is with us as well as Norm, and we're going to try to get into the S&P to start out. So you guys want to share screens, you do so, but the S&P on your screen right now, we'll start out with John. Do you have a feeling on if we're going to break out to the upside here, John, or is this just a stall before it goes down further?
No, I think it's getting ready to roll over and die.
Mhm. Yep.
Each incremental gain from the previous top keeps getting smaller and smaller.
Hmm.
We're trading very close to the moving averages. The news keeps going from bad to worse. Um, and the crash in precious and base metals and Bitcoin last week shows us that things can go down as well as up.
Hmm. And as far as the VIX is concerned, because I do the options, I'm sure you do as well. It still is kind of behaved. It has
Yeah, it
been,
behaves until it doesn't, and
yeah,
then
exactly. Yeah,
you
yeah,
wake up the next morning and it's up 50%. So,
yeah, yeah.
I think we have a VIX spike coming sometime this month. Maybe we'll get up to 30. I don't know. It just depends on how much worse the news gets.
Yeah.
But I think the next shocking headline will be how many people were wiped out by the gold and silver crash.
Yeah.
Because leverage was extreme, and uh, you have to wait till the dead bodies float to the surface
Right. As
to
far as
find out.
points are concerned, though, you would you like to see that 6870 get taken out on the S&P and maybe the VIX above 20 before you really felt like a further correction might be happening?
This could be a 0 year,
Yeah. It
a
could be
year when
flat.
the
Yeah, yeah. Hmm.
indexes don't move and all the action is in individual stocks.
Right.
And
Well,
people are asking, well, is gold going to zero? And I say no, because everything else looks worse. You know, Tech earnings are growing, but at half the rate they did
hmm
last year at higher valuations.
yeah.
And people seem to forget that inflation's gone up almost every month for a year now. And despite uh, three interest rate cuts, interest rates are going up.
hmm
That's not supposed to happen unless something really bad is about to occur. So I see warning signs everywhere.
hmm
The only surprise good news ahead of us is that everything just dropped 30% and suddenly got cheap again.
Yeah. If everything goes on sale. Yeah.
Yeah.
Norm, what are you seeing here on the markets? I guess you've been following the gold and silver pretty good. So, do you want to put your chart up and kind of get an idea of what you were seeing on the silver and gold before it broke?
Okay, we can do that. I do want to comment though on this this is the S&P, and I think that
Hmm.
I parallel John's thinking here, um, as far as especially the last part of the statement where this could be a kind of a zero result in the. You look at this chart, um, you're seeing less and less uh, almost interest. Of course, there's a lot of rolling sectors here. Yes, you have a problem with the tech sector, but it seems to be caught up with now. Now they're talking about some of the smaller stocks for the first time I heard on Friday and today about the people should be looking at. So the index will likely, in my view, not be as active as what has been active, and that's been um, the metals and some of the other commodities. But you can see the rolling flat nature of what's going on here. And of course, um, uh, I would expect it to continue. I was a little surprised not to see a kind of negative action in this market, which showed me strength, and yet the inability to break through highs that occurred, way back in November, refused to really be broken with any kind of emphasis. Maybe a little bit here, but there's no closing. There's nothing really to get you excited. But the further you pull back from this view, the more you see that we're still in an uptrend. So this sideways, and I've drawn a couple of horizontal lines here. I do concur with John about the possibility of this being um, really a ranging market as far as those metals are concerned.
Well, I was going to go back to that chart real quick because you had something up there that was kind of interesting. Could you go back to that chart we were just looking at?
Sure.
Yeah, that indicator at the bottom, it kind of looks to me like it is losing steam. Is that indicator? Can you explain that indicator? And do
Yeah,
you think it
it's
might be rolling over?
Yeah, it's an RSI, and it's under the standard parameters. If you just throw up an RSI on your chart, I didn't screw around with the numbers on it, but it does look descending, and I wish some of the more expert people in this. I use it primarily for position sizing, but I think you can see there is a volatility involved, but um, and a bit of a descending. However, and a divergence, I guess, is what you're pointing to as a
Hmm.
possibility. And
Hmm.
of course, that's always a possibility,
Hmm.
and something you should watch for. But we've seen divergences in the short term that seem to be met without much of a follow through. I mean, you did have a little bit here, but yeah, no, it's definitely something to watch.
Yeah.
I think you can always be fooled by the RSI, especially the longer term, the longer the chart that you use, the longer term chart. Um, but it is something that you want to take a look at.
Yeah.
It's a good point. The gold. Did you want to maybe
Yeah,
move a little
no,
bit?
yeah, I wanted to get because I know you've known the metals for a very long time, so I just wanted to see how you were reading them.
Yeah, and
A lot of people are
John
saying,
can.
"Is this pullback over?" and that kind of stuff. So I just want to get your flavor for what do you think?
Yeah, this. What are you going to say? These kinds of this is only reminiscent, even not to a greater extent, but to a similar kind of feel to what happened in 1980, where you had this big run up. There were a lot more, especially in the silver, which is even a worse chart. This is the silver. I'm sorry. Um, this kind of a move is legendary. That people will be talking. I
Yeah,
know I'm
yeah.
still talking to myself about it. But when and of course it only took out a few weeks of action. This is how I don't believe this is done. I think when you have a damage in a chart like this, you need to see some sort of accumulation.
Yeah,
Uh,
I agree with that.
you know,
Um, I traded the last silver top in 1980, the Bunker Hunt high, and uh, we had a 400% move up, uh, literally in a year. once the news out that the hunts were accumulating. And then after the 1980 top, it didn't make a new top for 46 years.
You're
If
Yeah,
right.
you bought that last top,
Yeah.
your money was dead for 46 years.
Are you thinking another
And
46 before we hit 122?
well, we hit, believe it or not, we hit that $50 high only in the end of November, two
yeah,
months ago. And in the following 2 months, it more than doubled.
Yeah.
It went from 50 to 115. So, I
yeah.
think we have to
You
wait
took
for more bodies to reach the surface
yeah, you took one
before,
of my
the
punchlines.
bottom on this silver move right here will happen when you find out that a major house went bankrupt on silver leverage or margin calls or people failure to meet margin. It'll be something like that. And you remember what the last top was in 79? Do you remember Norman?
Yeah, it went from literally from $5 to
But
$50.
didn't
Right.
they say liquidation orders only at the
Well,
exchange or
that's what I
something like
wanted to
that?
ask
Well,
John
no, what
about.
they did, what was happening is uh, Eastman Kodak was on the verge of going bankrupt.
Hmm.
And they complained to the president, and magically the next day, the margin requirement for silver went up to 100%.
Yeah.
And anybody who had any kind of leverage had to put up 100% cash or sell. And the market literally went down 25% the next day.
Well, of
So,
course, they did that today. But I wanted to ask you, John. I remember that with the when with the crash in silver, that it was down 22 days in a row, limit down, where they had these conditions in the market that would stop it from. Of course, the cash market dropped, and you can almost count how many limit down days it was going to take. But what happened here? Did they
well, no, silver
eliminate?
wasn't limit down 22 days in a row. Otherwise, you would take it into negative numbers at that rate. Um, the only limit moves I've seen 3 days in a row, that was in beef when mad cow disease came out. That was about 20 years ago. But they did absolutely wipe out the whole silver industry literally for 30 years. It did nothing.
Yeah, I mean, we were trading options at that time, and people were trying to get out. They couldn't get out of the options.
Yeah,
Um,
you didn't have the diversity of leverage instruments then that you have today.
mhm.
You didn't have things like the AGQ, which I don't know if you noticed, but the AGQ went from 425 to 150 in 2 days. That's the 2x long silver ETF.
Yeah.
So these have just been staggering moves, and you don't recover from that kind of damage in 2 days.
That's
Yeah,
quite a chart. AGQ is quite a chart, huh?
That's the one heck of a chart. We had leaps on it,
Hmm.
1.5 year leaps, and they went up 10 times.
now the
We
gold
put on the
down.
leaps when AGQ was at 30, and that was only a year and a half ago. So those just expired on Friday, ironically.
And of course we hit that 50 to 1
Yeah.
gold to silver ratio.
Yeah.
Uh,
Yeah.
and I think it got to about 44, 47, 48, but that seemed to be something that traders with that trade relationships were working. But this is the gold chart, which of course had the same type of damage, but may see a bit more support in this level here. In fact, it showed a little bit of that support today. I mean, this doesn't look like much right here, but this is this is a 400, 4, 5, 4, over $400 range today. I mean, these are crazy numbers.
Hmm.
Yeah.
Um,
We almost hit the 50-day moving average in gold, which is only 5% below where we are now. So that could be some short-term support.
mhm.
And the former highs there from July, June, August, around 4,400.
Yeah, that's another. They're all around the same number. They're all around 4,100.
Hmm.
in physical gold, all these support levels. So I think that's where we may be able to hold it.
Well, there certainly is a lot of interest in people. I
But
mean, to be,
people have been reminded that things go down as well as up, and I think a lot of risk taking for all assets right now is going to take a vacation.
yeah, and I help. I've been helping people with the prop trading, and you can't get into a lot of these markets when you have restrictions on how much you're willing to give up in past open trade equity highs, which is one of the rules and that really crash people in that new fantastic market of prop trading. So it's we're pretty much limited to the stock indexes and so on. I didn't even have it showed you the copper chart, which had amazing moves also. I mean, the
Yeah,
copper here.
copper also took about a 20% hit. And there are actual fundamental reasons to own copper, less so for silver and gold.
Yeah, I
I
mean,
mean, we're actually consuming copper. Nobody is consuming gold at all, really.
I don't
Gold
know.
jewelry demand hasn't been a factor in the market for a long time. Silver, at least you have solar panels and EVs.
Well, between Trump and hotels in India, there is some gold consumption. If you've ever been to a hotel in India, they're very much a beautiful hotel, some of the best in the world. But look at this. This is when the tariffs was announced, this kind of
Yeah.
25, 30% move. And now you had the just working its way back. But this is they say that markets fall harder than they respond, or they come higher. But this is really a typical example of what's going on. It's just these are hard markets to negotiate um, in the futures market if you're especially any kind of small accounts. But
Yeah, I
uh,
think the buy and hold days may be coming to a close. It's been buy and hold for 17 years in the stock market.
yeah,
The platinum market got a lot of boost out of the jewelry demand switching from gold to platinum over in China. And with that news that came out in January, the stuff really started to take off from the 1600 area, and it's back down to like gold into some support zone down here as well. But it's a thin market.
yeah. This is
And you
and
only have four suppliers in the world.
Yeah.
Um, and there's an arbitrage that's constantly going on between platinum and palladium for catalytic converters. And if the
Yep.
EV market is collapsing, that's got to boost demand for palladium.
Yeah. And palladium also had a nice correction right down to support around that 1600 area.
Yeah.
So,
Yeah, there's your palladium chart right here, which is really untradeable. You can see all the gaps, but that's pretty strong double top, breaking the high. Support here at this accumulation. All the charts look fairly similar, except for the silver, which really got out of line. But this is not dissimilar to the gold chart. This is palladium, and here is your platinum here, which is may have it's checked that area here. So look for violent sideways movement for at best.
By
In
the
order
way, the historic gold silver ratio for 4,000 years was 3 to 1 to 10 to 1. We hit 100 to 1 last week.
Yeah, it actually was. It's hardly been hanging around 85 in the high 80s for a couple of years. Uh,
Yeah, you were looking for insane indicators. There were more than you could count last week. But guess what? They kept getting more insane. So I got all my people out end of last year.
John, do you keep an eye on the Goldman Sachs commodity index? Because it broke out from 560 up to 620. Now it's pulled back to 574. It's 50% energy, and then the other 50% is split between metals and ag. And I see a big gap at 700 area from back in 2022. And I'm wondering out loud, do you think there's enough juice in that index to get us up towards the gap up there in 700, or do you follow that
I
at all?
do eventually, once we, digest all these current margin calls.
Yeah.
But the commodity story is still on for
Yeah.
sure.
Yeah.
And they're more attractive than stocks.
Hmm.
Absolutely, more attractive than technology stocks for sure. So, um, to create a new stock, you just need an entry in an Excel spreadsheet. To create a new commodity, it's a 10 to 20-year project in some godforsaken country. So it's the supply demand. Once you go into demand, that takes a very long time to unwind, and you really need a severe recession or a depression to stop it. And
Now,
we haven't
Norm,
had anything like that so far.
right. Norm, are you following the Bitcoin story? Because it does seem to be very much on the defensive lately, and this talk of extremely high prices. You know, I just looked up what happens after this halving, and supposedly after the halving, it goes up for 18 months, which came in right at target October of 2025. And then it's supposed to have a winter that takes you down 80%, which would take it down to about 30 grand. People are still saying that because of the ETFs and the government being behind it so much that it won't have this winter. But I noticed that it's in the 70s now. So are you following that at all?
Yeah, actually, my wife is the Bitcoin trader.
Okay.
I've got enough on my hands with with the metals markets, but I'm actually in the camp that is seeing a lot more normalization in the charts because of the broader interest uh, in Bitcoin by the institutions and, of course, the different instruments that have been created in the so that people can get into the Bitcoin in different ways. Um, I'm looking at it as a normal. I'm not looking for those 80% corrections anymore. I think that 40 and 50% is going to be probably the extent of what's going on. But we're in a critical place right now, holding this. Well, there's a moving average. I don't know what you're using there.
Yeah,
That's the
the gold, the
200.
gold, the gold line looks like it
Uh,
corresponds with the highs as well that happened in 2022 and also in 2024. So that neighborhood there, it looks like around 70 grand.
Yeah,
Uh,
it's a
could could
critical
be
area
could
here.
be a
So
place to take a bite, huh?
let me tell you what everybody's missing on Bitcoin. While the halving is supposed to deliberately shrink the supply of new Bitcoin coming onto the market, there is no limit on derivatives. And the number of Wall Street derivatives that have been issued against Bitcoin is roughly 1,000 times the amount of Bitcoin that's out there. And is becoming a market where the tail is wagging the dog, that the volatility is determined by buying and selling of the derivatives, not the Bitcoin. And if the selling of the derivatives gets ahead of steam, down 80% will be a piece of cake.
That could be the cause.
Absolutely.
Now, what
There
about
are
here's a
10x
question.
long Bitcoin ETFs out there.
Yeah, yeah,
And
yeah,
when,
yeah.
and when those get sold, they have to that has to be hedged and look out below.
well,
So eat.
it's like the Chinese selling the bonds and killing America threat. It's all everything's out there ready to be liquidated, and so there's always that extreme fear. But
Yeah, that's all fantasy, by the
Yeah,
way. Current Chinese holdings of U.S. Treasuries right now is 800 million. Divide that by outstanding national debt. Let's just say let's say the national debt right now is 38 trillion. Um,
they're not a big player.
well, not anymore. I mean,
Yeah.
they used to be big buyers of new issues. That hasn't happened in 5 years.
Now, one question for you, John. You mentioned the ETFs because this is something I thought might be the
Yeah,
problem
Chinese
also.
own 2%
Yeah.
of the current U.S. Treasury market.
Yeah. GLD and SLV are ETFs that are backed by physical metal. They took in upwards of $10 billion in a very short period of time. And if they have to go out and buy physical metal with that kind of money in an environment where physical metals are not that plentiful to grab, could that have been a big factor as far as the squeeze is concerned? These this big inflows into those ETFs where they have to buy the metal to back the ETF?
Uh, you know, Definitely that was a factor on the upside, um, less so on the downside.
Hmm.
I mean, I'm hearing stories, people all over Europe are getting orders for gold and silver, which they couldn't fill.
Yeah.
And they had to hedge themselves in the futures market or, through an ETF or any of the myriad instruments that are out there. I mean, definitely we've had broken markets for about a week or two or more.
And Norm, I want to swing
Well,
over to you on the currency real quick because the dollar index hit a very, very big support in my work at 96, and now it's at 97.57. And now the interest rates are going up here, yields are rising. So, do you see that that 96 area, if it ever was broken, there's the abyss underneath? And if it's not going to get broken, is there a heck of a buy down here on the dollar, which is not being addressed because this new Fed guy might be more hawkish than people
yeah,
believe?
I would tend to be in the camp of the latter statement that with looser, it's just that those things could be very temporary. If you bring interest rates down before they're supposed to come down from a reasonable standpoint, you're going to get inflation and that's going to force higher interest rates. But I do want to mention, first of all, yes, John, I think you're did you say 2% of
Yeah, it's
the
2% right now.
well, 2% of the
It's more like 1.5 if you
U.S. bonds are
calculate
being held by
against the
Chinese.
national debt ceiling, which is 42 trillion.
But I think you're forgetting the fact that they also owned 10% of the restaurants in America.
You mean
There's
the
10%
Chinese
Chinese
restaurants?
restaurants. Yeah. So that could be something. But as far as Bitcoin is concerned, I was at a meeting back 15 years ago when Bitcoin was just starting out. I was considering getting Bitcoin ATMs as kind of a side business, which
Okay.
I didn't do because the machines had to have $2,000 or $3,000 in there so that people could, and that was too much
Sure.
for people to tote around. But the idea was that there's a guy named Kurzweil who
Yeah.
who
Head
was
of
very
engineering at Google.
yeah, and he engineering Google, the synthesizer, kind of a genius type guy, and he was up there with Peter Diamandis talking about how Bitcoin is here to stay, and I think we're seeing that. I also think that the digital world is upon us, and Bitcoin is not going to explode to nowhere. I do think that there is a solid base somewhere in that $50 or $50,000 level where we should see some if it gets that low, if it breaks the 75, 70 area, because I just think there's just too much. I mean, this is the direction we're heading. No more cash. I mean, I think in Sweden, some of the Scandinavian countries, but I heard that Sweden almost doesn't accept cash anymore. In most, I go into a restaurant
Yeah,
sometimes and it's
you
all digital.
you try to spend cash there, they just give you a funny look.
Yeah, yeah.
They only take credit cards.
Right. And
But you know, this is the other big question for all crypto, not just Bitcoin. What happens when we get quantum computers?
yeah, and
What effect will that have?
Well, it means anything can be hackable.
Oh, I got you.
Not
Yeah.
only your own bank account, but also the code that backs up each individual Bitcoin can be hacked and therefore stolen. And it's not like theft problems are new in the crypto world. I have a number of clients who got wiped out, had all their crypto stolen.
Yeah.
So, uh,
But
um,
the stable coins are supposed to be the cat's meow, but I'm looking at Circle, CRCL, and I see it go from $300 down to $50. That
well,
doesn't seem like a good that doesn't
yeah,
seem like a good
if you believe
story
that, I
for
have some Melania Trump
yeah.
uh, stable coins, which I bought at $50 in their last 50-cent bid.
Right. So yeah, it's a Circle because Circle's a main player in the stable coin, and that BitMine with Tom Lee is another one that has can't get out of its own way. So
Yeah.
these are kind of indictments on that story a little bit, isn't
Well,
it?
my whole view of stable coins is you're taking more risk with less liquidity than the
Hmm.
US dollar.
Hmm.
hmm.
Yeah,
Stable
it
coin
avoids
hasn't,
fees. It avoids fees. That's the big thing, right? It avoids fees, right?
yeah, but yeah, you're avoiding a 1/10 of 1% fee,
Right.
but it's not protecting you against the 20% decline in the US dollar last year, for example.
Hmm. Yeah,
So,
that
John, where do people put their money, John? I mean, I tend
Gold.
to be in the speculative world. Uh,
Up until Wednesday, gold.
hmm
Gold was the last refuge for a lot of people who didn't believe uh, in paper currencies at all. And of course, the people who believed that 10 years ago now all look like geniuses. The people who started believing it on Wednesday, may have to wait another 30 years to get their money back.
so are we heading for more? Are we heading for normality? I mean, should people be thinking diversity now, to have a diverse portfolio, look at what's out of line and 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 invest in the normality of those entities as a general principle, or are we in a heyday of volatility? What's your view, John? Because you've always kind of had a pretty good macro view of things.
Well, if you're worried about current volatility going away, don't worry about that because Wall Street always has a way of inventing new volatilities. Um, that's my 55-year view of what's been going on. So, uh, if the current stuff stops working, they'll invent new things.
What
And
sector?
I don't think gold is dead by any means at all. I think it has a
Yeah,
ways to go. The
yeah,
central bank buying is still there. It's not going to stop.
no.
And they've been a major driver for 10 years.
Outside of the metals, though, what other sectors for the rest of the year? I mean, do you think these financials are going to be re-rated because of the AI benefits they get, or is healthcare going to make a turnaround because it's been beat up so badly?
Well, there's a different story for each one of those. Financials, uh, deregulation and a quadrupling the amount of M&A that's going on.
Mm-hmm.
Those are major drivers there. Those are not going to go away. And our top picks for the last 6 months have been Morgan Stanley and Goldman Sachs.
Mm-hmm.
And Goldman went up 70%, for example, before the recent sell-off. But uh, financials have been repressed ever since uh, 2009 when all of the restrictions came in after the last financial crisis.
Mm-hmm.
Those will come off. The stocks will double again. Then we'll have another financial crisis, and we get to run the cycle all over again.
So you're
Uh,
fairly optimistic, though, that their future is bright with dereg and
yeah,
possibly
I
a
am. And
re-rating of,
then
yeah, yeah.
for biotech
Mm-hmm. Yeah,
and healthcare, they should be the number one beneficiaries of AI because AI is allowing them to increase the amount of new drug creation by 1,000-fold, right when the baby boomers are retiring
right,
and the demand for all these drugs also hits generational highs.
right.
By the way, the ship I'm on, it's a retired baby boomer cruise. Practically everybody on the ship is over 70 years old and hobbling around on canes and walkers and wheelchairs.
Right.
So, the size of the healthcare market is similarly growing exponentially. By the way, if you're worried about jobs in the US, all the jobs being destroyed by AI are being recreated in healthcare
Yeah.
by creating all of these new cures that keep all these people alive longer.
Mm-hmm.
You add 10 years to human lifespans, which is probably going to happen over the next 10 years, uh, you're creating the size of the consumer market by 15% practically overnight. The
Yeah.
size of the whole US market for everything is increasing, but especially for healthcare.
Yeah. The biotech IBB and Merck have been outstanding places to be in the last 3, 4 months.
Well, and things like Amgen
Yeah.
and Lilly
Yeah.
and
Yeah.
all these other companies. So they could be the leaders this year and next year for sure, and
Yeah.
they could be replacing big tech, which are spending themselves out of profitability.
Now, Oracle has really gotten out of favor. Is that game set match with that, or is this a real
Well,
Is
this is the problem
$160 a
with the
bargain?
whole tech area and why they have died for six
Hmm.
months.
Right.
We aren't just building one AI, we're building like seven or eight of them all at
Hmm.
once. And are we really going to need seven or eight AIs?
Yeah.
No,
Overbuilding.
maybe one or two.
Yeah.
So we're creating a massive overbuilding situation. And this is why Apple hasn't spent anything on AI.
Right.
They think they'll be able to buy what they need next year for pennies on the dollar. And by the way, Apple was up $10 today.
It is up $10. It has earnings coming out, and I'm sure it's going to be announcing that they're making money because that's what they do over there.
Yeah, we put
Wasn't
out a
there
leak when
news?
Apple was at 200 last summer.
Yeah, that was a
It's
good
been
time.
one of our top performers.
Yeah. And it had a great
Wasn't there
pullback. Yeah.
news today? Wasn't there news today on Oracle?
Probably
Yeah,
not
they're
good
borrowing
because,
more money.
yeah. Yeah. They're going into
Well,
big debt
that's news
to,
about me.
yeah.
That's my news.
Yeah.
But
Yeah, one of the great stories for tech for the last 20 years is that they had such enormous cash mountains
Yep.
from these huge cash flows.
Yeah.
That is gone.
Yeah.
They have all spent that money. They're now, cash flow negative, except for Apple. And that was a major bull argument for the whole sector.
Now, what about Amazon? It seems like it might not be making the money on AWS that they should, and similar to Microsoft, does that have a risk of coming out with something that disappoints, or because the consumer's been out there spending like a madman, their numbers should be fine?
Well, you never want to underestimate the ability of the American consumer to blow money. And Amazon is the call option on that.
Yeah.
And Amazon also is way ahead on AI and everything that they need to make that work. So if I had to pick three tech stocks, it would be Amazon, Google, and Apple.
I got you. Hey,
yeah, it's
Norm, when people are going for the funded accounts, do they trade the currencies very often, or is it pretty much S&P now because the
you
metals have been
know,
taken away?
that's a good question. I'm always pushing traders to trade the euro and the Japanese yen. Of course, has had some major news last week on the Japanese yen as it bulked up against with their changes in the way they're doing things in banking. Um, but yeah, the fact that a currency contract is really a nice bite-sized pieces, and currencies tend to trend. You don't get wild intraday moves with the currencies for the most part, and therefore it can be something that you can ride for a while.
Hmm.
And I think that I just want to, I'm dealing mostly with 5 and 10 minute candle charts when I'm trading. This is, of course, the daily chart. And when you do that, you're going to get, if you have a good trigger, you're going to get an acceleration in the market that can really snap back. The idea is that in these kinds of markets, you need to find a trigger from a day trading standpoint that you can rely on to give you an initial pop, at least say 2/3 of the time, and then take that low hanging fruit, leave some of it in the trade. Number of contracts and so that you can allow for a run. But most of the money and most of the safety is in scalping in these kinds of markets. And I've never been a scalper, but I've learned to appreciate it over the last few months as far as trying to make money from day trading. But yeah, I think the currencies are a great place to be trading. If you look at any of the, well, that's a spread chart. Um, of which I mean you can see how smooth that can be, the relationship between that's the 50 and 200 again.
Yep.
But even if one just rode that all the way up in a reasonably small position, you can get some nice gains over time. But the if you put up the euro chart, I think you'll see some really a nice consistency there until just recently. But can you find the euro chart on its own? Let's see.
It seemed
Which
like
is kind of
120 was a ceiling, though, huh?
which one of my favorite markets? Well, yeah, I think
I mean,
so.
temporarily, yeah.
You can see that. Well,
Is,
this
is that
isn't
what you mean? Euro? versus dollar or
Yeah, that's the one that goes up to 120 right there and then came back
Yeah,
down. You had
that
it
look
on. Yeah, that's it.
well, the day charts the intraday charts look much smoother than that.
Well, that's
In any
nice.
event,
Yeah.
from a day trading standpoint, I think the currencies are a really great place to be now that there's some volatility in some of these other markets that people were riding high on. Um,
Are you doing anything with grains with the funded accounts? Because
no, I haven't really. Greens to me is more of a summer, dry,
yeah,
drought in markets. That's where I pay attention. I think
weather market. Yeah.
Jake Bernstein will tell you that there's not much really to do. It's more of an import-export market at this time of year,
Yeah, let
and
me tell
have
you
some
the
volatility.
problems
And
with grains. Every one of these, you're basically betting on the weather.
yeah,
Hmm.
Good luck with that.
Yeah.
And also the insiders have a huge advantage.
Hmm.
The actual farmers,
Hedgers.
the
Yeah.
grain middlemen, you're
Commercials.
trading against them, and they have
Yeah.
vastly more information than a retail trader will have.
Yeah. One of
absolutely
the
right.
things that are happening, John, I got to talk to you about is the 10-year note is leaking to the upside here.
Yeah, no
And is
kidding.
leaking going to turn into flooding?
I
Because
think it does.
it looks like it's dying to go up to 450 or 5%.
Absolutely. And let me just throw some numbers out there. Take a guess at what the most money ever borrowed by the U.S. Treasury in a single year.
No idea.
Just guess.
Uh, 2 trillion?
3 trillion.
Okay.
Guess how much the government has to finance this year?
4.
11 trillion.
Oh, the
There's a
big
5
beautiful
trillion
bill. What
budget.
happened to the BBB?
Well, the BBB generates a 5 trillion budget deficit, but
Yeah.
also there's another 6 trillion that has to be rolled over from the first Trump administration.
Uh,
So the Treasury has to hit the market um, for 11 trillion, and that's why they're coming up with all these new tricks to try and concentrate borrowing in the overnight market uh, and not hit the long-term market so much. On top of this, we'll probably see 3 trillion in quantitative easing this year with the Treasury issuing bonds and the Fed buying them. Do you know who else did that for 30 years? You
Japan.
know, Japan.
Yeah,
And if the US government does that, um, then you'll get a Japan-like result. No stock market performance for 35 years.
Mhm.
So, so far we've seen the market have a slow bleed. 3 interest rate cuts and no move in interest rates. What happens next? More interest rate cuts, more bond issuance, and a bond market crash.
Yeah.
And once that thing starts, and by the way, we've scared away all of the foreign investors in U.S. Treasuries over the past year with
Yeah.
the trade wars and the
Yeah.
hot wars.
Yeah. The other thing is positioning, and the entire planet is positioned for lower interest rates. Every bond guy who's ever
Yeah.
on Bloomberg, they're all talking about lower rates. The bonds are a great deal. No way the rates will go up. So the positioning is totally favorable to get a contrary move.
Well, you told everybody except the market, which keeps creeping up.
Yeah,
Yields
yeah,
keep creeping up. So
yeah,
everybody believes that story except for the bond market.
yeah. But yeah, the positioning is there for a big surprise move, just like a positioning, on anything that everyone is on one side. If it turns out the other side has to go, there's a total lack of
Yeah,
liquidity.
you wouldn't be referring to the precious metals
Well,
markets,
that
would
would be
you?
one example. One
Yeah.
example. I guess Circle going from 300 down to $50 would be another example, So when liquidity dries up, it's not a pretty sight, right?
No, absolutely.
Yeah.
a lot of competing factors. I mean, if you just take a look at this RSI, just in recent since November, you've got an upward bias, but we're getting close to that. It looks like there may be room for that spike to, I don't know about 4.5, but 440 maybe,
And
or
it's not like
something.
we're going to get an engraved invitation for this.
No, no.
One day they'll have a treasury auction and nobody will show. period, end of story, and you'll get your 50 basis point move all in one afternoon.
Well, I tell you, Stanley Druckenmiller's got a pretty good deal now. He's got two proteges down there, Scott Bessent and the new Fed guy. So I'm sure I'm sure
Well,
they
when
might
you're
have
a
they
hundred
might have good cocktail
billionaire,
parties, huh? Good
when
cocktail
you're a
party.
hundred billionaire, you get to buy whatever you want. Thank goodness he didn't have a preference for teenage girls.
Yeah, he's not going to be on that one, right?
No, he's too decent of a guy to mess with that sort of thing.
Yeah, yeah.
Hmm.
And he's never had a losing year in what is it, 30 or 40 years?
Not that he'll confess to, but
Yeah.
he is a hell of a trader. We at Morgan Stanley, we eventually banned trading with Druck because we lost money on every trade.
Kind of like the casinos. If you win too many games in a row, they shut you down, right?
They do more than that. They threaten to break every bone in your hands with a ball peen hammer. That actually happened to me once in Las Vegas.
Oh, it's a tough town.
I earned my way through college counting cards in Vegas at blackjack.
So, Norm, can you discuss a little bit about some of the things that you actually do with the prop traders and some of the things you focus on? Because you got the mental state and you got the actual markets and trading. Can you go into that a little bit about how you try to help people and people who are interested in getting into funded accounts, how that works?
Yeah, I think the this market, the prop trading arena is really fixed. It's fixed to the prop trading institutions. In other words, there's no difference in the number of losers, day trading losers in prop trading as there are in this, because you're trading, let's just call it for now, somebody else's money. You would think that the pressure is off, and you can trade more responsibly without that pressure. That's there are different pressures there, and it's the pressure of small bites and waste of time. That seems to be what really digs at you, not the fact that you lost all of the capital that you put in. You start with the $10,000 or $20,000 in a speculative account of your own, and somehow you blow it. You put in another $5,000 or $10,000, you blow that too, because of your own ills as far as trading. And you think, maybe if I go with prop trading and trade somebody else's money, it's going to be better. Well, it's not, it's a different game. I believe it's a little bit, it can favor the trader if they understand how to adjust a trading plan. One of the things is that in general, they don't like you to lose open trade equity. If you're trading $50,000 in a prop trading account, and you put on a trade and you have an open position of $1,000, and you allow that to come back to break even. Well, if you're working for me, because I've managed professional traders, and if you're working for me and let go of a 2% open trade equity to break even, you wouldn't be around for very long if you kept doing that without defending at least 70 or 80% of that open trade equity. Well, in prop trading, they really hold that against you. They want you to act more like a professional trader. Meaning that in prop trading, in that $50,000 account, right in the beginning, when you're given that fund, you can't breach 47.5. They give you a 5%. So 47.5, you're out. Now, in my example, if you have a $50,000 account, you were just awarded it because you passed the evaluation stage, and you had an open trade equity of $1,000, you let it go to break even. In your normal account, you say, hey, I'm a jerk, I shouldn't have taken it, and but I still have my money. Well, in prop trading, that line is not 47.5 anymore, it's 48.5, because they count that against you. Now all of a sudden you have a 3.5% floor instead of a 5% floor. So the idea is that they count open trade equity against you. So how do you combat that? What do you do to offset that rule that is there to make you a better trader, and at the same time have you continue to blow out accounts and pay them another fee to get back in? And the answer to that is you have to learn how to scalp with part of your approach. I think every day trader is looking for that move. And if you don't allow yourself a way or part of what you do to get a nice big trade, to be in a nice run, you're really taking away a lot of what excites you about day trading. So I don't think you want to do that. I think that part of the problem with traders in general is they have trading plans that don't match their personalities. Well, most traders in the day trading, part of their personality is wanting to see a run. You got to kind of leave that. So what do you do? And I suggest that traders that are prop trading take on a minimum, say, of 2 contracts and treat one as a scalp and another one a runner that you can be responsible to maintain open a certain trade of open trade equity if it does take off. So, and the thing about it is when you take a scalp, and I like to use limit orders to take a scalp, so I get the full benefit of the open trade equity that I've captured. That actually adds your distance from that red line, and so it's a constant game. I think prop traders tend to watch their equity instead of their distance from the red line. So in the beginning, as you're expanding the value of your account, you're best to just take chunks, pad that distance from the red line, manage the runaway trade or the runner, as I call it, and let that be the basis of how you trade, because that's one of the 2 or 3 things that you need to do to adjust a good trading plan to a trading plan that's going to work with prop trading. So that's one of the 2 or 3 things that you really need to pay attention to that I don't think most traders do, which is really why I'll go back to, Jim, your currency suggestion. I like the currencies because they tend to trade much smoother during the day, where you can have a nice signal, get your scalp, and also have a pretty good chance at maintaining a runner. And that's really what I have found to do it, because really what kills you in prop trading, what kills your attitude and your ability to have a positive expectation when you trade can be worn away by just spending months and weeks in prop trading without getting any result. You look back and you say, well, maybe I didn't spend a whole lot of money. I mean, I spent some, but look at all the time I wasted.
Yeah.
I mean, I could have called John and he could have just told me what to be, and I could have held all that time.
Right,
So
right.
that's the beginning of what you need to do as a prop trader.
Yeah. You tend to use that 8-minute moving average to try to keep things on a short leash?
Yeah, the 8 EMA, I think probably John would agree. I think it probably has some long-term effects. So the eight, we used to call it the golden mean, I think, or something like that. I think that anybody that takes a look at it can see that when you and I always look for 2 closes in a long trade, 2 closes below that 8 to be an exit. And I find that I think if people would just, when they end this, look back at a 5-minute candle chart, a 5 or 10 or even a 2-minute, and see how well the price will run above the 8-bar EMA until you get two closes below it. Now, to say that just openly is not a good thing to say, because if that first trade is a reversal type of a pattern, or you don't want to wait for the second close. So there's some caveats there. But in general, the 8-bar exponential moving average is a really nice place to be. And we also use the 34, which is a Fibonacci number, and we use that as a backstop, mostly to have us hold back on a trade that you would normally get in if you're trading against that. If the 34 is above you and you're taking trades into the 34, that can be a resistance area. So listen, good technical work is what you need as a day trader, and your ability to have confidence to do the things immediately without questioning yourself. All of those things in mass can make you a pretty good prop trading success. But any one of those things
Can also be your downfall.
Yeah,
Yeah.
it can be your downfall. So,
Hey, John, I remember years ago when we were talking, things like Goldman Sachs were trading, 300, 400, and you would say, Yeah, I think Goldman Sachs will be $800 in the next few years. And obviously, things like that came to pass pretty well. Since I've had that experience with you on many stocks, can you drop a couple of stocks on us that you would make that type of comment on now? Or because of the run up, because of the valuations, because of where we are, those opportunities are much more difficult to come by.
Actually, you forgot the buy on Nvidia at
Well,
$2 and
I didn't want to go
the
on, and I
bigger
don't want to
buy of
waste the whole.
Tesla,
Yeah, yeah,
the
yeah.
bigger buy of Tesla at
Yeah.
$2.
But I'm telling you, so you have a long laundry list of those kind of things because I said we've been talking for years. But is there that many opportunities like that in this kind of a market, or is it going to be a deal where a Goldman Sachs will be at 1,500 before you know it, that kind of thing?
Well, I'll tell you what I told my own webinar last Wednesday. For the first time ever, I said there are no low risk, high return trades in the market right now. There are
Hmm.
only high risk, low return ones.
Okay.
The market is really picked over.
Yeah.
If we get any kind of weakness, um, then there may be buys in the sectors I mentioned before, which are banking, biotech, and small caps. Um, but only those areas. And at the bottom line is that we're at the end of a 17-year bull market.
Right.
If you look at the charts, we've gone straight up from 6,000 in the Dow to 50,000. And there's just not a lot. In the meantime, the number of people who've entered the market, including recently, has just gone up exponentially. So, what's the next positive surprise? Well, what's in the market now? Well, low interest rates is in the market, new Fed governor, tax cuts, deregulation, AI, all the stuff in the market. What is the next surprise positive for this market? Can you think of any positive surprise that could hit this market? I can only think of one. Everything's just gone down 30% and suddenly became cheap again.
That, so that's the bargain chip is we get a correction and then the good stuff can be bought at a discounted price.
Yeah, if you drop, say, 20% in the index,
Yeah.
you have a lot of lead stocks that will drop 50 or 60. And by the
Right.
way, Nvidia dropped 50% last April.
Yeah.
So,
Yeah.
it's not like this is some unknown concept.
Yeah.
So I would rather wait for one of those and go take a cruise to
There you go.
Antarctica, for example,
Yeah.
until a good setup comes along.
Until the
You-
reversion to the mean happens, and then when
Yeah,
it
the
does,
most
then step
dangerous
in there.
thing you can do when everything hits your target is to raise your targets.
Yeah.
That's the worst thing you can do. No, you take the money, you go on a long cruise, wait for
Yeah.
another good setup,
Yeah.
and then you put money in the market.
Yeah.
John, did you say you worked for Morgan Stanley?
10 years. I set up their
In New York, in
international
downtown
trading department.
Wall Street, on Wall Street?
Yeah. Well, Wall Street first and then London.
Interesting. My little brother, who's now 65, he worked for Morgan Stanley for 25 years downtown. Jay Hallett in the accounting department.
Yeah, I didn't have much to do with the accounting department. I was on the trading desk.
I see.
I covered the Persian Gulf for 10 years for Morgan Stanley, from 1980 to 1990. And then when Kuwait got invaded, uh, the Marine Corps came for me and said, at that point, I knew every private airstrip in the Persian Gulf.
Hmm.
Hmm.
And I'm doing some government service after that.
Interesting.
All right,
No,
we're
I
coming to
used to
the.
I used to fly down to Abu Dhabi, rent a plane, and then land on the par five golf courses of the sheiks who had all the money.
We're at the top of the hour, guys. So I would like to just have you guys explain how people can get a hold of you, Norm, for the funded accounts and the other disciplined trader
Yeah, I would
stuff. How they get a
say
hold of you? Yeah.
I'd say if you're interested in taking a look at what it takes, I've got a kind of an intro type product that's very inexpensive. If you go to thedisciplinedtrader.com /prop, thedisciplinedtrader.com /prop, you'll see it. It gives you kind of a good introduction. Let's see what that looks like.
Okay.
I think it's still up there. I even have the holiday special still up. You know how that goes, John, when you're on a cruise and you forget you still have the holiday special.
Yeah.
So it's a
Either that
$500
or
product.
dementia setting in.
Anyway, this is something that can really start you out with understanding and benefiting. It gives you kind of some of those tips and tricks that I just mentioned today. So you may want to stop by that.
And we'll call it the Valentine's Day special, so it's a holiday. You know what I mean?
That's it.
Yeah. Okay, John, how do people get a hold of you? And I know you've got the newsletter, but other things as well, correct?
Yeah, madhedgefundtrader.com. The easiest person in the world to find. We publish 25 newsletters a week. We have trade alert services, educational videos, books, my own biography. We've been at it for 20 years. We have tons of content, and people tend to join us and then stay forever. Average annualized return for 20 years is 50.4% per year.
No. They just
And yes, we do have stocks that are about to go from $2 to 200, but we like to save those for our paid subscribers.
that would make sense. That would make sense. Well, Norm and John, I appreciate you guys being here. We'll be talking again, I hope. And to everyone out there, to try to take advantage of what these guys can do for you by contacting them. And we'll see how this market unfolds the rest of the year. I'm going to send it
All
back
right.
to, yeah, nice to
Stay
talk to
warm.
you. Yeah, stay
Stay warm,
warm.
John.
Yeah.
You take care.
Don't let the penguins bite you.
Yeah, it's not the penguins I'm worried about. It's the killer whales.
Oh, that's true.
Mhm.
Yeah, watch out for them too. All right, you guys, good talking to you, and we'll be talking to you soon. I'm going to send it back to David now. Thanks a lot for being here, everybody.
All right, thanks, guys. Yeah, great discussion. So, just a reminder first, be sure to join us for the Tech Wizards conference this week. It's tomorrow, Wednesday, and Thursday. John Thomas will be at 1 p.m. Eastern Time tomorrow. On Tuesday, Norman Hallett will be at 4 p.m. Eastern Time tomorrow, Tuesday the 3rd. And then Jim, the option professor, will be on Thursday at 6 p.m. Eastern Time. So be sure to join us for that. And, a great lineup otherwise as well. 30 excellent trading educators showing off their favorite indicators, software, apps, and other tech tools for trading. So, um, uh, then, yeah, be sure to subscribe to Timing Research on YouTube, Substack, or your favorite podcast app to get the recordings. Also, if you just come to TimingResearch.com, you'll be able to find the archive for today as soon as I can get it posted. Also, if you just come to TimingResearch.com tomorrow, Wednesday, and Thursday, there will be a link at the top of the page to join the room for the Tech Wizards conference as well. So just want to thank my guests again for today. John Thomas of MadHedgeFundTrader.com, Norman Hallett of TheDisciplineTrader.com, and Jim, the option professor of OptionProfessor.com. Thanks, everyone.